Good morning guys, it's Dwight here from Smiley Forex. I've decided to make a small little video for you guys, so please just bear with me. As I make these videos I will get better at it. The reason for me making this video is just to point out to you guys that this method does work and you must please stick with us. It's the best out there, believe me. All you have to do is master it and you're away. I was in the Skype room yesterday and there were a few guys that were left behind that are a bit struggling, and that I thought I'd make a little video just to point out to you guys a few trades that took place. Now I know this is hindsight and you might say yes, it's easy hindsight. Yes, of course it's easy hindsight, but what I'd like to do to you guys is to what we have to look at and look for to be able to take these trades. So bear with me. I know it's hindsight, it's always easy, but I will do my best to explain it, and I won't make a long video. It will be short and sweet, just to sort of knock home a few points. Looking at the Kiwi, the New Zealand dollar 15-minute chart, I think it was yesterday or the day before this. Here's the Asian session. Now price came out, it messed about, and then this green candle broke the Asian session high. And look at that, guys. We normally look for a M at the high of an Asian. Now it formed a beautiful M to perfection with a very small a larger engulfing candle, this red one. Now I know Chris likes to enter at the top here and put his stop just there. It's a very small stop. I normally go for a little bit larger. I wait for this candle to form this, what we call the second leg of the M, which is this candle here. So now there's the M. Okay, so my stop is still there, and my risk would be I would take profit at 3 times the risk, and it came out right over there, which means I closed 80% of my trade and I let 20% run, and I got stopped out at break even. I'd moved my stop to break even. I got stopped out there, but who cares? We got the risk reward. We got 3 to 1 risk reward. Now if you missed that trade, for example, don't lose heart, because there's another phase we talk about, this phase 2 that Chris teaches us. What you do is, say for example this formed an M and you missed that, what we normally do is we go into the second phase. Then we draw our fib levels from this high to the low, from the low to the high, beg your pardon, because we're following the market. It's follow the flow, we call it. So we know this is a high now because price is coming down. So what we're looking for, we're looking for an entry around about the 50% mark, and there you go, there's 50%. It came, and look at that. Not only did it test the 50%, it formed a beautiful W. Can you guys see that? There you go, W formation, wham, and that is a bullish engulfing candle. Okay, I wouldn't call that a railway track because that's a bit bigger, but anyway, our entry would be there. Some people could have ended on the 50% and put their stop over there, and look at those pips. We take at when the price gets to 3 to 1, we take 80% off the table, let 20% run. Who cares? We got our pips. We get stopped out here. But going a bit further, going into the New York session, we had an M. Look at that, with a bearish inside bar. Now that is normally a reversal bar, but it's still a beautiful M. I entered there, stopped there, and off you go. If you'd like to go further, you can just look at this one pair. Let's just take away this fib. Let me just get rid of that fib and draw another one in for you guys. Say for example you missed this trade. Let's just see where this takes us. We draw our fib, we follow the flow to the low, it comes back, it tests 50% exactly. You see guys, there it messes about on the 50% and off it goes. So we could have entered another trade here. All you have to do is be willing to take these trades. You could call this a sort of an M, I suppose, but even if it's not an M, we could call it a space 2 trade. Your stop would have been just there, and off you go. This is going into agent session. Set your target at 3 to 1. Take 80% off the table. You wake up the next morning, you've got nice pips in your pocket. Let's just quickly look at another trade I looked at yesterday. I missed it. I'm so cross about it. Coming into the Asians from the Asian session, there you go. We're looking for an N. It made a beautiful multi-session M. We call it M formation, and there's your inside bar, and your stop would have been just there. Also, we have the 800 EMA that got tested for confluence. Take that trade and look at that. It just all day ran away with us. It is 80% I would have taken around about there, 80% of the table, and 20% still running. Now I cannot believe we missed that trade. These are the kind of things we've got to look at, guys. Bear with us, practice it over the weekends, go back like what we do and look for M's, look for W's, draw your fibs in, and all you have to do is look for that. There's nothing tricky, there's nothing special. This is it. It is so simple. Practice, practice, practice. It's not going to happen overnight. I promise you that. You need screen time. You need to sit down in front of your computer, and what I do is just scroll back, look for M's, draw my fibs, and say, oh, that could have been, that could have been. And then when the live market comes, that become easier. You start seeing these patterns. There's a saying that you need something like 10,000 hours. I hope it's not going to take that long, but I do believe in the next 2 or 3 months, some of us already have mastered it in the first month, and we could really work together and make this the best Forex community. Believe in yourselves. Enjoy your weekend, guys. We'll catch up on Skype, and do some work. Take it easy, and thanks for listening. Bye for now.